What's up? We are live. Ready, guys? We are looking at a 5-minute chart. The Nasdaq is basically sideways, but ATR is 17, which is better than 9 here on the 5-minute chart, so we can make this work. Again, we are looking at the December contract for NQ. 5-minute chart. ATR is 17, and we are 15 seconds out. Let's see here if we get anything reasonable that we can do. I'm actually curious, those of you guys who are already in here, have you done any trading thus far today? This is probably the most sideways day, at least after the first, well, I guess after the open, that we've had in a couple of weeks. Okay, it's especially apparent if you look at a daily chart. Today is essentially a doji, but that doesn't mean we can't do some range scalping. Range scalping is always on the table. This right here, by the way, is a tremendous example of why if you get in the habit of only being able to trade trends, you are screwed. Because ranges happen more often than trends. So, I think it's a little more difficult probably to trade ranges compared to trends, but nothing we haven't faced before, especially recently. So, let's get after it here today and see what we can get done. 4 minutes, 15 seconds out. Good morning, guys. How we doing? Roy, Pat, Brandon, good morning. Good to see you guys. Scott, how we doing? John, good to see you. All right, let's see what we can get done here. Okay, so my thought here to kick off the day. You could draw this like this. I would probably do this. Right? And maybe get rid of this with the understanding that it might be there. But this down here, to me, just looks like a flat bottom, which trumps anything else. If the bulls are able to curl this back and give us a decent close within the next few bars, before this line extends, within reason, above this wick, all of a sudden we gotta start thinking, all right, are we shooting for high a day? Until that happens, I'm just not convinced, and I will remain trading this wedge. Which, by the way, as it widens out, opens us up the ability to do so inside of the wedge, because, you know, right now it's about 40 points wide. So we can do some stuff inside of the wedge. I'm not a big fan of trading the middle, but I will if it's there. But let's see here if the bears can give us a downside test. And if they give us a break, all of a sudden we're thinking short instead of buying the low of this wedge. Now, again, ahead of a flat bottom or flat top. In this case, it's a flat bottom, which we're looking at as maybe a potential region of some kind of support, some kind of buying pressure, right? There's always that inherent added risk because the flats tend to be a little weaker than the levels that have a little incline, like the ascending or descending support and resistance levels. So, when we're looking at a wedge like this, I typically think of this guy, we have to slap a number on it, right? As like 55% probability of holding, and this guy is like 45% probability of holding. Doesn't mean I'll shy away from trading it, but it's got to be in the back of your head. Welcome. We got a new regular here in the chat. By the way, hey, if you guys are newer, and if you're lurking, I see you. I see you in the chat, man. All right, 50 seconds out. Yeah, I mean, listen, I gotta tell you. Hey, Lee, how we doing? Okay, so we are 26 seconds out, and I'm looking at this bare body, and it is nearing the lower third of this wedge, but we're coming into the flat bottom. I would probably not take a trade like this if we were coming into a descending or ascending level, but I am going to have to get the copy trader engaged because risk on this is very easy for me to manage. And I'm going to go ahead and put out a stop limit sell and see how this closes up. And I'm not against, it's getting kind of low. Let's just see if we get a fill. We'll get a fill. I'll go ahead and suck this up to the signal bar and see if we can get a push down through. Now, that whole risk, that's the protective order. If we get an opportunity to manage early, I would love to do so. But I just want to see if we can break through that flat bottom at least a bit. Give me enough space to take some profit, just as a scalp mentality. I'm not looking to swing this a million points, but just looking for more of a quick break downside through if we can get that. And that'd be a half decent way to start the day here. ATR is 16. All right, now, Bears, take it down through. All right, coming down in for a test. I'd like to see it pop through. Again, ATR is just under 17. So a half ATR might be a little light, but a bit better than half an ATR. And I'd be cool with, considering this is just a scalp idea, really nothing more. Come on, Bears, little more. Little more. Those are struggling a little bit. We got within one tick or so of what I would allow myself to pull. But, I mean, you gotta be disciplined. Here we go. Here's another test. Boom, there we go. Do we get a fill? We will get a fill. All right, we got about 9 3/4 points, I believe. So, good little scalp idea to kick off the day. Let's move on. We're about 2.5 minutes out on this 5-minute bar. So that was about $1,700, 1770, 1770. So we got 9 3/4 points. Where is that? Okay. All right, 90 seconds out here. And I don't expect them to just take that all the way through immediately, which is why I took profit. And that's looking to be the right decision thus far. The flat bottom's still a big concern here. All right, 30 seconds out. We're now popping back up into the 20 EMA. You know, by the way, I've seen a lot of people already today, hitting social media to be like, you can't trade today. The market's sideways. You can trade. You can trade. Every professional is trading today. Now, does that mean are you going to end up taking a whole shitload of trades today? Maybe not. Maybe not. But there's a lot of scalps to be had on a day like today. I think when people say that, they say that because they're unable to trade ranges, because all they ever knew how to do, even if they make money, man, all they know how to do is trade trends, which is so dangerous. What happens if the market ranges for 6 months? Are you just losing the house? What happens then? Right? You got to learn how to do both. And I get it. You know, some people are going to perform much better in trends than ranges and vice versa. But you gotta be semi-productive in all market environments. At least try to be. It's going to take time to get, good enough at all of them. You might currently be tremendous at trading trends, but you kind of suck at trading ranges. That's normal. It's okay. So if you're making a whole bunch of money when the market's trending and giving it all back and then some when it's ranging, keep doing what you're doing in trend markets, but you got to figure out something else for range markets. Maybe you're over trading. Maybe you're not taking enough trades, but you're taking too big of size. Maybe you're betting on breakouts. This is probably what you're doing. You're betting on breakouts when the market is ranging and then the breakouts are failing and you're wondering what the hell is going on. Right? So on that trade, I was not betting on the breakout. I was betting on the test out, which is why and then taking profit right around here was a bet that this was going to happen, which is not to be that guy, but is exactly what happened. So 2 minutes, 23 seconds out, testing the 20 EMA here that is currently inside of the wedge. I'm not big on taking trades right around this because a lot of times the market just gets glued to it. But I'd be happy to short. If we can get a small bull body, maybe a small bear body, rejecting off up there, I'd put it short. 100%. It's easy to manage risk. You can use this to manage your risk. If it happens later, you can just use, the wedge in general. Pick a top above that wedge. Use this. If it's later in the day, you can use this. Even the opening bar here would make sense if this expands enough for that to be small enough risk to justify, what you could get as far as reward. Doesn't have to be one-to-one. A lot of scalping is going to be negative reward to risk. Most swing trading is going to be positive reward to risk, but it doesn't, that's not a rule. All right, newish 5-minute bar here. We are getting hung up here at the 20 EMA on the 5-minute chart. I mean, we might as well pop around while we wait on that to close. Here's the 1 minute. Yeah, I mean, the 1 minute's not half bad. I think it's a little tough because you're getting these sequences that just reverse kind of out of nowhere. The 2 minute, a little bit better here, a little cleaner. This makes a little more sense to me. You get this bigger wick, now an attempt at a reversal. Still really not any trades here in the last, like, 8 minutes that I would have taken on the 2. So, back to the 5 here. Less than 4 minutes out. Any good trades so far? Yeah, we took 1 scalp so far. You can pop back in the using the DVR feature here on YouTube, like 10-15 minutes, and watch if you'd like. 2 minutes 15 seconds out. But, I mean, you gotta be disciplined. Here we go. Here's another test. All right, minute 20. A lot of wicks here on the... Yeah, we're looking at the 5-minute time frame. A lot of wicks here. And that 20 EMA, really for kind of the first time throughout this entire wedge, which is basically the last 2 hours, that 20 is acting a little bit more like an actual point of struggle. Now, it acted that way back here. We eventually broke through, formed more of the actual wedge, then we could draw it. But I gotta tell you, this flat bottom here has my eye. If we can break that flat, I'd like to get short. Now, would I sit short for 45 minutes? Yeah, probably not, because most breakouts here today are not going to go very far, and if they do, we'll know it eventually. So I'd rather just hit out, take my profit with the understanding that, hey, this probably isn't going to go very far, but I participated. And then if I do, like, miss a further push, I can still just short it if the market ends up tanking, rather than betting on the tank and being wrong 90% of the time, because the wedge just comes back into play. So that's my philosophy here today. Here comes a new 5-minute bar, rollover now. Really not much there. That's going to be an inside close. You guys see this? Closing inside of the previous bar's wick low. Not a lot for me to do. right, here come the bears stepping back in, trying to make a test. Another test of that little flat bottom low. Let's see if they can. Now, again, I'd be open to basically taking a clone of our first trade of the day, which was getting short with a stop limit sell right below this bar's close. Took profit on that move downside because, again, we didn't think that this was going to go very far. It didn't. I would take a clone of that if we saw close like basically here. But again, you gotta understand, this is not a bet on the breakout. I would just risk the signal bar, look for a push downside through. You could even move this down a little bit, kind of draw that wherever you'd like. I'd probably use the average of all those candle wicks and just see. But it is not, I cannot stress enough, it is not a bet that it's gonna go tremendously far, because I really don't think it will. But we got 2 minutes, 45 seconds. Let's see if the bears take this down lower quicker. All right, 2 minutes. Bears coming in for a test. The closer we get to that flat bottom, the less willing I am to put it on. Let's see. But I will tell you what that would open up for me is the idea to get long on any small bull body to follow. First, we got to see how this bear bar closes up. Minute 15. Ninth day with Apex, 50K funded. Hit the profit target day 7. Milk days 8 and 9 for a total profit. 53,858. You, assuming you didn't break any rules like 30% drawdown, things like that, you have a payout coming. It's exciting. Good work. Good work. Will that be the first payout? All right, 12 seconds here. Bull's trying to buy this thing back up. Let's see if this closes inside. Yeah, it's gonna. That is ugly. All right, new 5-minute bar here. Awesome, first payout. First of many, good work. All right, we got less than 4 minutes out. And this wedge now is starting to tighten. So what I start to look at Now I'm going to get rid of these lines because I don't like to draw these lines inside of other big obvious regions, channels, wedges, you know what I mean? But you start drawing like a wedge like this, you could say, well, that is kind of a mini wedge inside of the bigger wedge. So that might slow down volatility. ATR is already coming down. We're down to 15.5. It was 17.5 maybe just 25 minutes ago, 20 minutes ago. Now it is starting to come down, but typically those little channels inside of a bigger channel don't last all that long. So I don't like to trade them. I like to trade the bigger channel and just wait for a setup if the little one is trying to form, because it will eventually break. You ever thought about voice acting? I'd love to. I mean, the problem with the reality of that world, from what I understand, is that, you know, it's not all The Rock in Moana? Yeah, I think that's the movie. The reality of that world is a grind for every paycheck. And most of the time, you know, they're kind of small. But I gotta tell you, it sounds like a lot of fun. Minute 40 out. All right, so if the bears can take this lower and give us a test of this flat bottom, which is in 60 seconds, we're getting the rollover of this 5-minute bar. Then we have a decision to make. My decision is likely to be, the closer we get, the less willing I am to get short looking for a push through, because the risk only increases, the potential reward comes in. At that point, what I would look at is, hey, can we get a small-ish bull body for the next bar, which will start here in 35 seconds, for me to get long for a push back up into the wedge. That's what this idea becomes now that we're pushing lower and lower inside of this wedge without an entry. So the short idea is kind of leaving, and a new long idea is being born here. So let's see. I'd like to see a deeper test, honestly. We're tempting the bears here by leaving that open. Okay, so by the way, in 29 minutes, Powell is scheduled to speak. So that complicates things a little bit. So we're going to keep an eye on that. Yeah, I don't think we're going to necessarily watch it, but we're going to keep an eye on the charts as our main focus. And of course, headlines coming through. I will update you as they come. So he is scheduled to start speaking in 28 minutes. There's the test that we were after. All right, 2 minutes, 20 seconds out. That is very good to finally see that. Now what I want to see is I would love to see this bear body close right about here and then give us a nice small inside close bull body that I would buy the close of, because that makes our life incredibly easy. We just risk this curl down here, which is relatively small risk, for basically a 1-to-1 or better scalp back up into the wedge. You know, it could be an outside close. In this case, I would also go for an inside close because I'm not looking for some big, massive reversion. Just to push back up into the wedge. There's a good push out of the bears. I love to see that. 90 seconds till we get to close here. And then we got to see how this next bar, at least the first couple minutes of it, react. Do we push lower or do we respect this little flat bottom region here? Good push, bears. All right, that should help to bring volatility back up. ATR already up a full point, back up to 16.5. You're on the 5-minute chart. It's very good to see. So, what we're going to do is, does everyone see this wedge? We know that that is there, but for the sake of getting a fresh set of eyes, we're going to delete it. It is still there. But we're 15 seconds out. This next bar is very, very telling. This next bar determines basically, do I get short or long? So, roll over here in a few seconds. Let's see what we get. 2 minute also rolling over right now. Beautiful. New bar. Let's see. All right, this is exactly what I was thinking here. We've got about 3.5 minutes until this 5-minute bar closes up. If this 5-minute bar were to come and close like up here, I will buy the close just using a limit order. I wouldn't necessarily need to get fancy with a stop limit buy up here. Just put it on using a limit order because it's very easy to manage risk. Just use this low, which happens to be low of day. But that will only happen if we get a bull close like up in this region here. If this turns into a bigger bear body and closes near the low, all of a sudden I'm looking to get short. So this bar here, the next 3 minutes becomes very interesting for me. We got to see how this closes up. By the way, a whole bunch of new people here, it looks like. Apex 80% off is scheduled currently to end in less than 12 hours. That ends today. Okay, so if you want to take advantage, I guess you can gamble on what deal's coming next. They might just go right back to 50%. No one knows, okay, what they're doing next. But 80% off single day pass with code BIG, B-I-G, at Apex. That ends today. So go hit that if you want to stock up. All right, here we go. 2 minutes out. Bear's trying to take control. Let's see if we're going to be getting short. We might be. All right. Okay, so this becomes a very interesting point on the day. This, I mean, listen, the next 70 seconds basically, for me, say a lot about, hey, is this going to maybe break out into a little bit of a trend, a soft bear trend? Or are we headed right back up into the range? Now, again, we do have Powell speaking here in about 21 minutes. I don't want to see this close up as a doji. We've got 50 seconds to clean it all up. Let's see. All right, bulls, there you go. Not too bad. ATR about 16 here on the 5-minute chart. Okay, we're about 10 seconds out. Copy trader engaged. If the bulls close this clean the way it currently sits, I will be getting long using a limit. Punch that long, suck risk up to risk the signal bar and only the signal bar. And we'll stay exposed to the upside here and see if the bulls can continue that push back up into this range. This was sitting as a wedge for 2+ hours. And now we got to see. If the bears continue this thing lower, take out our signal bar, cut me, and move on. But as it currently sits, I want to participate to the long side, see if these bulls can maintain that range. Because we know, in a range market, what are most breakout attempts going to do? Most breakout attempts are going to fail, or at least not go very far. So let's see if that's the case here and see if the probabilities work out in our favor. That's all we can do. Put it on, accept the outcome. All right, bulls. ATR 15.5. All right, bulls. That's it for the bears. Suck this baby back up into the range just a bit. ATR 15.5. If we could get, again, more of a scalp mentality here, I'm not looking to swing this thing. The market is range bound, at least. That's what I'm believing right now. So, 2/3 of an ATR would be tremendous on this trade. Let's see if we can get that. Decent job, bulls. More work to do. About halfway through this 5-minute bar. There you go, bulls. Keep that pushing. We need some more out of the bulls than that. Beautiful. Keep that moving, bulls. Little more. Come on now. Having a little trouble up there. It's all right. I know what I need to get on this scalp, and we're not going to waver on that. Looking for about 2/3 of an ATR at a bare minimum. Boom, there's 2/3 of an ATR. Can we get a fill? Leave that out for a second, see if we can. By the way, that's the test of the open of that bar, and we will get a fill. Good scalp, moving on. All right, 35 seconds out until the close here. We're heading right back into that range. Right back into that range. All right, now that we're right back into the range, we're testing that 20 EMA here on the 5. What do you guys think? You could have bought this again. It's just I can't because we're heading right into that self-fulfilling prophecy of the 20 here on the 5-minute chart. Nico, if passing that EMA can use as support for high prices, I don't use the EMA as support or resistance. I use it only as an afterthought supporting factor Or in this case, something to stop me from taking the trade just because we know that people look at it. Now you could say, yeah, but it went through in this case. Sure, in this case, I'm playing the probabilities. I don't care about this case. I care about what happens over, 1,000 instances. So here we are. We sit, we wait for trade setup number 3 on the day. A couple of good scalps thus far. All right, listen, by the way, a couple of good trades so far. If you have not yet, please press like on the live stream. Helps out tremendously, and I appreciate you doing it. See this big wick on this 5-minute bar? I think the bulls are a little insecure just around that 20. It's a lot of people watch it. It's a popular time frame. It's a popular EMA. It has a lot of eyeballs. Therefore, a lot of algorithms are programmed to look at it. Now, again, don't take trades off it. I tried a lot of different time frames with a lot of different popular SMAs and EMAs, simple moving averages and exponential moving averages. I ran data on all of them. This is years ago. And I could not get them and them alone to actually work for me. And I think it's really hard to do so without other context. So I use it only as a supporting factor, not as a setup driver. All right, we are 25 seconds out from the closure on this 5-minute bar. Now, this wedge that we were looking at before, this was the wedge we were looking at previously, right? This next one gets a little bit tough because nothing is really defined yet, but it's like, do we start looking at this kind of thing? Move that a little higher. Just draw it. Don't overthink it, by the way. Do we start looking at this, or do we start still looking at this and just look at this as the exception? So what I'm going to do is I'm going to leave the chart just naked and let the price action speak for itself, because at the end of the day, the price action is king. All the indicators and levels are just, well, levels are price action, but all the indicators, trend lines, blah, blah, is just, it's just supporting factors. That's all they are. The price action always wins, so you guys know I like to delete things as quickly as makes sense as to not confuse ourselves, because in trading, I don't think this gets preached enough. If you're confused, you're going to make big mistakes. If you're confused, it's going to be really hard to make money. You want every decision you make, entering, managing early, when to stop yourself out, when to take profit on a particular trade, to be as simple as humanly possible. It keeps stress low, and it does a really good job at maintaining your edge on most trades, which you need, obviously, if you plan to be in the game for any extended period of time. Jose, Nico, by any chance, do you have a video explaining your scalping strategy? It's not that simple. Price action, there's a lot of different examples. I'll tell you what I do have is I have a backlog already of a whole bunch of live trade examples of me taking them. That's how you're going to learn, or just by watching the stream. I have a video of a particular setup that I'll be adding to that playlist. It's a playlist that is on the homepage of my channel. The playlist is called The Playbook. And I'll be adding to that with individual setups, deeper explanations of why I take them, how I manage them. But there's a ton of live trade examples on the channel, and there are many, many more to come. A single video saying, here's my strategy, is so elementary. It's not going to teach you anything. It's way deeper than that. Context is important, and context does not take 7.5 minutes to explain. So watch some examples, man. I think that's how you're going to learn the best, if you even care to trade the same way as me. If you don't, man, trade the way that you do. Doesn't mean you can't watch, hang out. Halfway through this 5-minute bar, 2.5 minutes out, let's see what we get. Again, if you're just joining us here, we are looking at the 5-minute chart on the NQ December futures contract. And that golden line right there is the 20 EMA, which we just have up for a little bit of context. And down here, that red number is the average range in points of a 5-minute bar based on the last 10 5-minute bars. New traders are so focused on using 10 indicators to tell them everything. Found my success using only volume-weighted average price, volume profile, and pure price action. Yeah, price action is king. It's always going to be king. Everything is based off of price action, so why not go direct to the source? I don't understand why everyone's trying to use all these middlemen when price action is just the source. It's real. It's not a derivative of anything. It's a derivative of human psychology, and therefore what algorithms are programmed to do, which is based off of human psychology. And it's what's happening right now. So why wouldn't you go straight to the price action? Doesn't mean you can't use some things, you know, to support yourself. Like the 20 EMA I just use as something maybe to stop me from getting long here, which, you know, I mean, look, self-fulfilling prophecy. Volume-weighted average price very much so acts a similar way. Sometimes, not always. And the ATR is real. It's just, hey, what's volatility doing? Helps me make a reasonable ask out of the market in terms of profit take. Keeps me contextual to the current volatility environment. All right, 20 seconds out. Let's see here. I may have to put on trade number 3 of the day. Let's see. Okay, 10 seconds here. Copy trader, engaged, ready to rock. If the bears close this up clean, then I am going to have to use this stop limit sell. Yeah, that's not the cleanest close we can see, but I will give that about 30 seconds. Just see if we can get a fill. And if we don't get a fill in 30 seconds, then I do not want to participate. ATR under 15, 14.9. 15 more seconds to get a fill. Let's see if we get it. 10 seconds. Gotta get ready to pull it. No fill. Gotta pull it, no trade for me. We'll go next bar here. All right, Powell scheduled to speak here in 4 minutes. So keep that in mind. That does make our life a little bit more complicated. But I will be keeping you updated on headlines as they come through. So while we wait for him, I will be right back. Quick break, and I'll be back, and we will cover at least headlines from Powell. I don't want to watch it necessarily because it's not like some big massive event necessarily. But we do want to keep an eye on headlines in here and how it affects the market. So be back in a few minutes. Don't go anywhere. We got more trading to come. All right, welcome back. Okay, so few headlines out of Powell here. They have since slowed, but we'll see if we continue getting anything. I'll let you guys know as and if we do. Market here, the volatility, it seems like in the last 10 minutes we've kind of ripped off the band-aid as far as Powell speaking. But we have to keep an eye out for any kind of comments he makes that causes things to either rocket higher or dump down to new lows. So we'll keep an eye on that. But, you know, I'm not totally against taking trades if there is clean price action setups. It's just we do have to keep an eye on the headlines. Okay. So what's up? Any of you guys taking trades during this? A lot of wicks the last, 10, 12 minutes. Quite an indecisive market right at this very moment. Which again, if you're trading price action, it's easy to see. There's no guessing. You say this market's incredibly indecisive. There's really nothing to do regardless. But let's see if the bulls can actually try to break this out. Again, 20 EMA sitting right there. You know that the bears are looking at that, getting a little bit of confidence. We'll see if they can step in enough to reject it a third time here. All right, halfway through this 5-minute bar, 2 minutes, 20 seconds out. Let's see how the bulls close this baby up if they're able to hold up through that 20 EMA. All right, 1 second here. Let's see if we can bring this in. Okay, let's see here.
Some opening remarks.
Okay, so Powell's sitting down.
Going to sit now. If you're with us on YouTube, you can see that for a bit of a Q&A, a fireside chat with the head of the Greater Providence Chamber.
Yeah, I mean, we're now starting the Q&A section. The question is it even worth paying attention to, or do we just keep an eye on headlines here and focus on our trading?
Remarks brief.
I guess it depends what kind of questions are asked during the fireside chat, doesn't it?
No risk-free path for the Fed amid dual threats. Says the outlooks for the labor market and inflation both face risks, describing it as a challenging situation. And
right,
noting
25
that
seconds out here from the close of this 5-minute bar.
Tilted to the upside. These were his words. And risks to employment to the downside. A challenging situation, he said. There is no risk-free path. We're going to wait for the Q&A to begin here as Jay Powell speaks to the Greater Providence Chamber. Let's listen live.
We've had the opportunity many times to discuss with you the conditions in this Fed region, of which Rhode Island is part of the Boston region. So, Mr. Chairman, I would ask you to think about your comments reflecting on the importance, what you have said, the importance of deeply understanding local labor markets. And I'm wondering if in your deliberations leading up to the most recent FOMC meeting, whether there was anything particularly distinctive in what you saw coming out of the Boston Beige Book.
So let me say a word about the Beige Book. So there are 12 reserve banks, as you know, around the country, and each of them has deep ties into not just the business community, but medical community, educational community, nonprofits.
This is worth listening to, at least this question.
And each FOMC cycle, which is sort of 8 of those a year, they do a deep dive and they collect lots and lots of information about the economy. And so, and that information gets collated and put into what we call the Beige Book because it's beige, and we're not that original. And so we get that a couple weeks before each FOMC meeting. And I have to say, I don't know of any source of sort of qualitative information about the economy that even approaches this. It's just a lot of conversations with a lot of people, and I personally find it very useful. Sometimes you look at that book and you see significant regional differences, and this is not one of those times. So, for example, the Boston Fed piece in the last Beige Book talked about lots of spending on AI. Well, guess what? That was pretty common across 8 or 9 of the districts. So I would say nothing really jumped out from the Boston piece. What you saw was all around the country, you saw pretty modest growth, wage and price inflation at modest to moderate levels, the economy growing but not fast, and uncertainty, significant uncertainty about federal public policy is kind of weighing on investments and decisions about investment and hiring, except in the area of the AI build-out, which is just going really strong.
Yeah, let's focus back on trading here.
So nothing distinct.
I imagine we're probably going to see a lot of questions like that. I think the Band-Aid has likely been ripped off, so let's shift our focus back to the market here. I mean, basically the entirety of that question didn't really move much at all. We're sitting as a doji. Obviously, that question a little bit focused on AI, which is not going to have a tremendous impact on the market, at least right now, not like maybe tariffs would. So let's focus back on trading. They might discuss tariffs here at some point during the Q&A fireside chat, but I think our time currently, at least as from a trader's perspective, is better spent looking at the charts, keeping an eye on headlines off to the side, rather than sitting and watching the entire fireside chat. All right, so let's focus up here. We are 2 minutes out from the close of this 5-minute bar. 1 sec. All right, so let's stay focused here on the markets. Minute 45. Mario, Nico, do you have a video showing what's a good computer setup for day trading, scalp trading that helps mitigate latency? So your latency is going to be as long as the PC can run your platform without hiccups. So honestly, any like gaming PC, you definitely don't need overkill for trading alone. But if you plan on creating a video diary of your trades for the sake of your own study, you're going to want something that can process both a rendering task with running your trading platform. But any like gaming PC is going to be fine. Mine is definitely overkill, but obviously I have more going on than just the trading platform. Just make sure, hey, you know, if it can run reasonably complex video games, you're not going to have issues with trading process. Now, getting fiber internet is a good idea. Not that you necessarily need such ridiculous speeds for trading, but stability is the important thing. The biggest thing that I can tell you guys as far as technology for trading, A, use hotkeys. B, if you have more complex actions, script them into a single key press, which is called macro keys. And C, but certainly not last, you want to be hardwired in whenever possible. Not always possible. If you're on vacation, if you're trading at the airport, at a coffee shop, you can't always use a hardwired Ethernet cable. But at home, you want to be hardwired in. You don't want to be trading on Wi-Fi if you can help it. Now, we've all done it. Sometimes you have to do it, again, if you're traveling particularly. But if you can use an Ethernet cable, if your PC has an Ethernet port, you want to use a hardwired connection. It's just much more stable. All right, 4 minutes out here. Bulls trying to wick this baby back higher. Let's see if they can get this done here. I would like to see the Bears close this nice and low because that opens up 2 trade ideas on the next bar for us. But a big giant wick makes things tough. We still have, you know, half a 5-minute bar here, 2 minutes, 25 seconds to clean this up. And let either side take control. Let's see if we can get that. Come on, Bears, get something done for us here. Those Bulls wicking that candle back up. By the way, guys, hey, you know, if you're trying, I say this every day, essentially, if you're trying to bootstrap going full time, I get this question a lot. Which prop is going to be best for that situation? I think in that situation, you're going to want to go take Profit Trader. They do daily payouts once you're in a pro account, and the money's in your bank account super quick, which is important because we have bills to pay. So Take Profit Trader is 40% off, and you will not pay an activation fee when you pass if you use code BIG at signup. Okay, now Apex, again, the 80% off single day pass deal that ends today. So you have like 11 hours to stock up. Otherwise, you're gambling on whatever the next deal is. That is the same code, code BIG. But Apex, I think, is best when it's time to scale. They let you go to 20 accounts, whereas Take Profit only lets you go to 5. But Apex does not offer daily payouts. All right, here comes the close of this ugly little 5-minute bar with a tremendous wick on it. So we'll go next bar here and see what we get. This right here, I mean, I gotta tell you, this is the look, clearly. With an overarching vibe of this. Don't overthink it, just draw the average of what you think most people would draw. Yeah, Joseph, on Apex, you can pass the eval as quickly as you'd like. You can pass it in 1 second, to be clear. Now, in the funded account at Apex, obviously that's different. There's a minimum of 8 trading days before you can request your payout. But for the evals at Apex, Apex's big thing, by the way, the evals are super cheap, ridiculous. Okay, again, currently 80% off with code BIG, and you can pass in 1 day, which means you can take 1 trade. If you hit 3K and close, you're passed, and you can activate your account that night after the close. A lot of props don't let you do that. And you can go to 20 accounts at Apex. Okay, but they don't, that's the trade-off, right? They don't do daily payouts. But if you're trying to scale, you don't really care about daily payouts. You just care about getting the numbers as big as possible. Whereas at a firm like Take Profit Trader, you have to trade for 5 days to pass the test, but then once you pass, you can take payouts every single day. And the money's in your account very, very quickly if you're above the buffer making money. All right, 3.5 minutes out from the close of this 5-minute bar. Okay, we're 2 minutes out here. Let's see how the Bears close this up. This would be, by the way, a 3 consecutive bear body sequence. However, with today being, you could say, oh, we're in a soft bear trend these last 2 hours. I don't know, but if you look at the overarching day, I mean, wouldn't you call this, I would call this a range. Yeah, there's a little bit of variation. Dip, we try to go higher, we dip a little bit. But at the end of the day, this to me is still a range market. It certainly is not broken into any kind of respectable trend. You still have a lot of bull bodies mixed in with the bear bodies. So just because this is a 3-bar sequence out of the bears, it shows some strength. So let's clean this up here. Okay, 15 seconds out. Let's watch this bar close up. Okay, that'll be an outside close, just barely. You see this? Closing beneath the previous bar's wick low, so the next bar becomes very, very crucial. If it closes as a small-ish bull body, then I buy that, look for a push, risk the curl. Make the decision-making very, very easy, which is how we like it. All right, 3 minutes out. Come on, Bulls, give us a half reasonable close. And that all of a sudden becomes a setup. But I don't like this big old wick. Two minutes. See what we get. All right, 60 seconds. If the Bulls can't put something together here, then they're a little too insecure. But if they can, I'll be looking to buy the rollover. Got to get that bar closing up near the wick high. Otherwise, the Bulls are too insecure for me to want to join them. $30 seconds. Decent to see, Bulls. Keep that moving. All right, 15 seconds out. If the Bulls can hold this up in the next 10 seconds and close that near the high, within reason, I don't want to see it just skyrocket, then I will be looking to buy the rollover with a limit. Punch that to the long side, risk the curl, and our decision making is extraordinarily easy, which is the way you gotta love it. All right, 15.5 on the ATR. See if the Bulls can suck that back up into the range. If the Bears take this lower and take out that wick low, just stop us and move on. All good. Now, by the way, we do have the 20 EMA up here on the 5-minute chart. Though this being a scalp idea, it's not, extraordinarily in the way. Less than 4 minutes left here on this 5-minute bar. Risk management here, just offloaded to the computer. All right, let's see if those bears can take out that wick low. Again, our protective stop is out, so we're all good if it does. But if that does occur, hit me out and move me on. Because I no longer want to participate if that's the case. But before that happens, let's see if the bulls can actually put this back up into the range. All right, bulls. Back up into the trading range. I just don't buy it, bears. I don't buy that you're going to take this super far, super quick. Let's see if they take out that wick. I mean, bears having a little bit of trouble down there. Which you don't hate to see when you're sitting long. But probabilities, at this point in the trade, obviously not tremendous here. See if they take it out. $18 seconds left, by the way, on this 5-minute bar. At this point, risk completely offloaded to the computer. Highly probable we get stopped after a close like that out of the bears. Very good close out of them. But you gotta leave it on, let it work. All right, that will stop us. We gotta flatten the copier. And we are flat. All right, good. I like the scalp, but we just didn't work. Let's move on. Okay, that is loser number 1 on the day. That makes our 3rd trade of the day. And disarm the copier and look for setup number 4. Okay, 3 minutes out here from the close of this 5-minute bar. Let's see what we get. You guys are too funny. I'm pretty fucking sure that that was the first loss I've taken in the last, like, week on stream, which, by the way, is not normal at all. I'm losing all the time and showing every one of them. But if you're crying after a loss, this is not for you. You're too bitch made to be a trader. That's the truth. 2 minutes out, let's see what we get. All right, 60 seconds. Now, this is one of those scenarios where you end up with what is traditionally a short setup in a range market. Okay, which starts to get a little bit weird. So 50 seconds out, let's see how this closes. Dev, if you dislike the PA intra-trade, will you ever cut early? Yep, do it all the time. Do it all the time on stream. That was not... if I were to cut early on that trade, it would have been a rule break, which I'm not into. You want to be like everyone else? Start breaking your rules. Quickest way to do it. All right, 7 seconds. Hell of a close out of the Bears. But I need one more bar here. Otherwise, there's not enough information in this context. Four minutes out. Now, if the Bears can take this quite a bit lower, all of a sudden, I am trying to get short with a stop limit sell. If the Bulls reverse this, we have a repeat of the last trade, more or less. So let's see what we get. right, less than 3 minutes out. Bulls trying to step in. See if they can put something together here. All right, we have a semi-repeat of the last trade. Looking like it may form. I mean, a minute 42 is a long time, so we'll see if this even holds up. But we have two potential setups here, and in 90 seconds, we'll find out if we can take either one of them. Let's see. All right, 50 seconds. Oh, goodness. Goodness. What is that? Do we get a headline? Well, looks like Powell has concluded commentary, at least. As of extremely recently. So, 20 seconds here. Let's see how this closes up. Better get ready. All right, we're 15 seconds out. Copy trader is engaged. Let's see. A lot can change even in the last 6 seconds. A lot of wicks. Wicks on both ends. Nothing there for me. We'll go next bar. False alarm. There we go, Bears. Here we go, Bears. Something of interest. Beautiful. All right, less than 4 minutes out. Let's see how this 5-minute bar closes up. Pretty big bar here out of the bears. I like the way it looks. I just don't want it to keep growing too much. If it grows too much, it gets a little too complicated to manage risk, but as it sits currently, it's still reasonable. So 2 minutes, 15 seconds out. We'll find out. "90 seconds. Oh, bear is continuing to grow this bar. All right. We are about 25 seconds out. I'm going to have to get the copy trader engaged. I don't want to see too big of a wick on the close here out of the bears. If the bulls hold this up in a relatively sizable wick, the way it currently sits, probably going to have to chill out a little bit. Otherwise, we're going to go ahead and use this stop limit sell. The bigger the wick, that's actually quite reasonable. Put that out and we will get a fill. Time to put on some risk. And we can definitely afford to do so in the accounts. No big deal. So we will suck that out, risk the signal body, and look at this for likely a trade that is going to take a little bit of time, but preferably as quickly as possible, and the money is good. So we are sitting short, baby. Let's see if the bears can take this down through. And now I'm not looking for some big, massive push into the money necessarily, because we can't always expect the moves to go. Again, breakout attempts in range markets don't tend to go extraordinarily far. When you get a bar like that within reason, it's got to be put on. So, let's see what the bears can do here. I know some of you guys are like, we're selling the intraday low? You crazy bastard. You're damn right we are. That's the trade I gotta put on, man, regardless of outcome. However it turns out, but when it's time to put on risk, you slap the risk on and you accept that outcome. So come on, Bears, see if they can get it done. ATR, about 18, 17.8. Now again, I will manage this bar by bar if needed, but being on a 5-minute chart, obviously each bar is 5 minutes, so bar by bar management can take a little bit of time, and if we get the opportunity to do so, meaning a setup that I would have to put onto the long side, that and only that is the scenario that I manage early. At least as a loser, right? Bulls trying to step in. Let's see if they can. We got a minute 35 left here on this 5-minute bar. And for me to manage early here, I would need to see 2 consecutive bull bodies, because I would not be getting long after a move like that out of the bears on a single bull body, especially a small one. But we've got 65 seconds till this bar closes anyway. But if we get 2 consecutive bull bodies still within my stop loss, which means inside of the signal bar, this bar, right? That, or 2 or 3 or more, right? That is when I manage early. Decision making very easy here. But bears, damn it, let's do it to them. 40 seconds out. All right, it's a very small bear body inside close on that last bar, essentially what I would call a doji. You know, not the greatest close you want to see. But it's all right, let's go bears, take it through. ATR here, 17.8. Decent push there out of the bears. Looking to get at least better than a full ATR here out of this trade. Good push. Bears, keep that moving. That's not enough yet. Keep that pushing. Decent. Get about 20 points. That's better than a full ATR. All right, good trade. Move on. Now let's see if this breakout actually goes someplace. And for those of you guys who like to talk shit, P&L is back to the high of day. So, fuck you. 3 minutes, 24 seconds out until the close here of this 5-minute bar. Let's see. Yeah, we're about halfway through this bar, 2 minutes, 40 seconds left. Now at this point, it's like, what do you guys think? I mean, realistically, if we look back on the day, right? I mean, this just a brutal range day after the open. You know, 15 minutes after the open, we were just brutally ranging all day. So now, you know, the reason I took that off at a little better than a full ATR is because I cannot expect this thing to go very far until we get at least another... Well, I mean, maybe this bare body would be enough. But with this hesitation here, you know, if this bare body was a little bit bigger, this one would certainly be enough for me to start believing the bears here, is that it's going to go very far and actually turn into a bear trend day. But still at this moment, I'm a little more inclined to believe that we just eventually break back up into the range. Which is why it's a little tough the deeper we go to keep betting on the trend unless we get a really, really clean bear sequence, which this has not really been after this little hesitation since we were in that trade. Or when we were in that trade, right? So let's keep watching here. I mean, a minute 37 out. "45 seconds. Any of you guys hitting this close short? Are any of you guys gonna do it? This bar is 40, almost 50 points tall. That starts getting pretty big. You got to put on 50 points worth of risk in what has been a range market, except for the last 20 minutes. Realistically, like 10 minutes. Anyone putting this on? That bar is too big, man. I can't justify that risk. 50 points with an ATR of 22. You're putting on 50 points to get less than a half of an R, realistically, like 40% of an R, best case scenario. I can't justify that, man. That'd be a rule break. That'd be emotional. Can't do it. Lee, this is actually a really good question. Hello, just wondering when it is possible to use your system to qualify for funding without triggering the drawdown. The moves against your positions often exceed drawdown limits before moving in your favor. Yeah, Lee, so the open P&L that you see that I'm showing every day on every single trade, that's collectively. I'm copy trading. Okay, so in my actual accounts, I'm trading anywhere from 2 to 3 micros to 1 mini. Sometimes, 2 minis. But like on a 50K Apex account, I'm typically trading 5 micros, and I'm copy trading across accounts. So the open P&L is not in a single account, so it's extraordinarily reasonable actually in each account. Which, again, we haven't talked about this in a while, but the move here, guys, for trading prop is to scale not vertically, horizontally. Get a whole bunch of funded accounts across prop firms and trade reasonable size in each one. That's how you scale. You don't scale by saying, I'm going to keep my expenses super low and being a cheap ass and buying 1 funded and trying to trade 8 minis in that funded. The best trader in the world is going to blow it every time, right? It's just you don't have enough room. You got to have room. Look at this bear move though, man. 3 minutes out here from the close. This is crazy. This is quite the bear move. Guys, reminder, Apex, 80% off, single day pass with code BIG, That's BIG, ends today at Apex Trader Funding. They are 80% off, and you can pass in 1 day. You don't have to, but I mean, technically at Apex, you can literally pass in 1 second. There's no time frame that you need to trade for at Apex to pass the eval. So if you go to Apex, stock up on 80% off evals with code BIG, you can pass some and be funded tomorrow, theoretically, of course. That ends today. We don't know what the next deal is going to be. You know, is it going to be 90? I mean, that'd be fantastic, but they just had 90, so probably not. We'll see. No one knows except them. All right, Bulls wicking this bar back up, man. What a tremendous push here out of the Bulls. All right, guys. Well, hey, if you're not yet subscribed to the channel, I will be live, as I am every day, tomorrow morning, and we'll be back at it doing the same thing. 4 trades today, 3 winners, 1 loser. So, good day thus far. All right, guys, I'm going to hit lunch. Be patient. Let the setup come to you, as always. And when it does, hit it. Put on the risk and accept the outcome, baby. All right, guys. See you in the morning. Have a good afternoon. Stay patient. Stay disciplined. And fucking win. All right, guys. See you in the morning.